Hello everyone and welcome to a new video on the channel. Today we will analyze one of the most important battles in the world of technology. The race for cloud computing and artificial intelligence. Alphabet, Microsoft, and Meta are investing billions of dollars to position themselves in this key industry. But who is spending more? What impact could this have in the future? To answer these questions, we will look at a dynamic graph created from the image shown on screen, which will show us the evolution of capital expenditure by these three tech giants from 2021 to the projected 2025. To understand the importance of this data, we must first clarify what capital expenditure or CapEx means. It refers to the money companies allocate to improving their infrastructure, purchasing equipment, building data centers, or developing new technologies. In the tech sector, these investments are essential as they allow for the expansion of server capacity, improved cloud efficiency, and advancements in artificial intelligence. Since 2021, Alphabet, Microsoft, and Meta have been competing heavily in this regard, spending billions to strengthen their presence in the cloud and AI. And as we will see in the graph, one of these companies has accelerated its spending at a surprising rate. But before delving into the figures, it is important to understand how these investments can generate long-term returns. In the tech industry, processing and data storage capacity are fundamental for developing new products and services. Companies like Google, Microsoft, and Meta depend on large infrastructures to support their platforms, ensure the speed and efficiency of their services, and, most importantly, continue innovating. If we look at the evolution of technology in the last decade, we have seen how cloud computing has changed the way companies operate. Previously, companies relied on physical servers and local storage, which limited their growth and scalability. With the advent of platforms like Google Cloud, Microsoft Azure, and Amazon Web Services, organizations can now access storage and data processing more efficiently and flexibly, paying only for what they use. Another key area where capital expenditure has a significant impact is in the development of artificial intelligence models. Alphabet, for example, has been aggressively investing in specialized hardware such as its tensor processing units, TPUs, which are specifically designed to accelerate AI model training and inference. Microsoft, on the other hand, has been expanding its partnership with OpenAI, which also requires massive computing infrastructure to support models like ChatGPT. Additionally, the role of connectivity must be considered in this growth. To support the massive data traffic generated by these services, tech companies have had to invest in fiber optic networks and submarine cables. Alphabet has been expanding its global infrastructure network with projects like Duna and Equiano, which aim to improve data transmission capacity between continents and reduce service latency. Alphabet's infrastructure expansion strategy also responds to the growing demand for high-performance computing services for businesses. As more companies seek to integrate AI into their processes, cloud processing needs become more critical. Alphabet, through its Google Cloud division, is offering advanced solutions for industries such as healthcare, finance, and e-commerce, further driving its need for data center investment. Another key aspect driving increased capital expenditure is competition with Amazon Web Services, AWS. Although Alphabet and Microsoft have significantly increased their investments in the cloud, AWS remains the market leader. To close this gap, Alphabet has adopted a more aggressive investment strategy in innovation and new technologies, aiming to differentiate itself with personalized and AI-optimized solutions. If we observe the dynamic graph, we can see that in 2021, Microsoft led capital expenditure within this trio, with Alphabet closely following and Meta slightly behind. However, as we move forward in time, Alphabet begins to increase its investment at a faster pace. This investment growth is no coincidence. Alphabet has identified artificial intelligence and cloud computing as strategic areas for its future growth. For years, Google has dominated the internet search and digital advertising market, but the company knows that to continue competing with Microsoft and Amazon, it needs to expand its business beyond advertising. One of the key factors that drove this increase in capital expenditure was the growing demand for cloud services. With the rise of remote work and accelerated digitalization due to the pandemic, businesses have become even more dependent on cloud solutions to manage their operations. Google Cloud, which has historically lagged behind Amazon Web Services and Microsoft Azure, has sought to gain market share with massive investments in infrastructure. If we analyze the breakdown of these investments, we will see that a large part of Alphabet's budget has been allocated to the construction of new data centers. These centers are essential to ensuring that Google Cloud can offer faster and more efficient services. Additionally, Alphabet has also been investing in the development of custom chips to optimize its AI operations, a move similar to what Apple did with its M1 and M2 processors. Another area where Alphabet is directing a significant portion of its investment is in research and development of new AI algorithms. Improvements in language models, computer vision, and automation require a considerable amount of data processing, which in turn demands more physical infrastructure and advanced software. Alphabet is betting that these advances will allow it to differentiate itself from the competition and maintain its advantage in the tech industry. Now, if we look at 2024 and project into 2025, the change is even more evident. Alphabet has announced a capital expenditure of $75 billion for 2025, surpassing its two main competitors by $13 billion. This growth is reflected in the graph, where Alphabet overtakes Microsoft and Meta in investment. This move reflects a clear strategy. Alphabet does not want to be left behind in the race for cloud computing, a sector dominated by Amazon Web Services, AWS, and Microsoft Azure. As artificial intelligence becomes increasingly dependent on powerful infrastructure, the company is betting heavily to ensure its future position. Alphabet's investment not only seeks to strengthen Google Cloud but also has implications for its ecosystem of products. Services like YouTube, Google Search, and Google Assistant increasingly rely on advanced AI models that require powerful infrastructure for their training and deployment. By investing in CapEx, Alphabet ensures that these products remain leaders in their respective categories. Another aspect to consider is Google Cloud's geographic expansion. Alphabet has been investing in building new data centers in different parts of the world to reduce latency and improve customer experience. Regions such as Asia-Pacific and Latin America have become key areas for cloud computing growth, and Alphabet is making strong bets in these markets. In summary, the tech race for cloud computing and artificial intelligence is at a crucial point. Alphabet has decided to take the lead in investment, surpassing Microsoft and Meta with a projected capital expenditure of $75 billion for 2025. This bet reflects its intention to compete at the highest level in an industry where infrastructure defines long-term success. If you found this analysis interesting, I invite you to watch our latest video, where we explore the growth of AWS and something few have noticed about Amazon's stock. See you in the next video.